Thursday, November 20th, market analysis, Stan Ehrlich, and what a day. I start out with stock market indexes, go to futures, and then some stocks. A whole mess of stuff happened today that's extremely important. Start out with apparently a fundamental piece of information, and I rarely use the word fundamental. I'm a technical analyst. Charts are my crystal ball. Fundamental piece of information came out that said that the hiring of employees was bigger than expected, and that was around the opening or maybe a little bit before the opening, I think around the opening, and caused a very, very big up gap on the opening this morning in the stock indexes. In fact, within an hour or two, the S&P 500 got up 13 points approximately. That is a lot, especially for up days. Remember, it's harder for the market to climb up than it is for it to fall down. Bear markets fall faster than bull markets go up, period. So, after the rally, which lasted only about an hour, we started well, I'll use the word crash. We started a big move steadily, consistently, no panic. Took about an hour to drop all the way down to unchanged and lower on the day. Bottom line, we have a major rally this morning that failed miserably, broke into new low ground for weeks, closed at its bottom, down 10 points approximately on the day. That's a 23, I think it was actually 24 total or almost 24 point range from high to low. That's one of the biggest ranges I've seen since COVID. And those are spectacular, unfortunately, for bad reasons. This is bearish. Unfortunately, I have to say very bearish. Some of these indexes have already broken, if not tested, the October 10th low, which I talked to you about every day since shortly after October 10th. Plus, we have a bearish engulfing ER sell signal on the MES at the very top of the market, the exact high day. And another one a day after, which I don't see very often, very rare. And now it's starting past tense to come true. And I think we're only halfway, and maybe it's even more than that, down. This is the chart I've usually been showing you with the bottom we got on April 9th with a bullish engulfing ER buy signal. Great. This sell signal didn't work very well. It only lasted a day or two. Sometimes that happens. My main concern is when the signals are bad, and they are sometimes, lose much money. Limit your losses and try to let your profits run. That's my motto. We have a possible, and I say that on purpose because I'm not sure that it's going to work the way I'm expecting it to. Head and shoulder top. The first pivot point for the neckline was the low on October 10th. For the MES and all of the other indexes, that's the low that's important, October 10th low. There's a low slightly higher. I think it was October 17th. Well, it was for the MES. And it's just simply establishing better support around the lows of October 10th. But I'm sorry to say, well, not sorry, because I told you this is likely to happen, that October 17th low is broken and we closed below it. And almost broke, like maybe tomorrow, the October 10th lows and closed below that. And all of a sudden, you have a new low and a new low close for over 2 months. Quite a while. Beginning to define a bear market? Maybe. beginning to find more of a break to the downside? Likely. I'm going to do this real quick. You take the highest high for the move and you measure down to the neckline, and that's the depth of the formation. And there it is right there. I'll grab the line and move it. So the top of the line is now at the breakout level today, the neckline, and my minimum downside objective is going to be 62.14 for the MES. Period. We'll see if it works or not. That is a minimum downside objective. Okay, I'm going to start going faster because those kinds of comments I made for the MES are about the same for the other indexes with slight variations. Here is a 30-minute chart on the MES. Look at this crash. It went all the way from 67.90 in just about an hour down to about, I don't know, 67, 65, 80. Huge. One of the biggest moves in a short period of time that I've seen in a very many months, years. Plus, of course, it gave away all the bullish news, closed a new low ground, and all the other stuff that's goodies. We have one more level of significant support. Other levels have almost always been broken today. And that is, of course, the October 10th lows on the MES. Let's go to the spider. Guess what? The October 10th low on the SPY has been broken, and we closed a little bit below it. This is huge. This is a gigantic bearish engulfing on all of the indexes. And most of them have made new lows and new low closes for weeks. On a scale of 1 to 10, this is a 9.9 whopper. I see this happen maybe once every year, once every 2 or 3 years. I've been doing this 53 years. Spider, 30-minute chart. Broke all the important lows going back to September 23 and closed below them after being higher on the day by a hell of a lot. QQQ, same story. New low close below the October lows. What can I say? This is very bearish. How much of a rally can I expect after today? Well, first thing in mind comes the October lows, going back up to those, and then not all of the indexes have closed below them, but the important ones have, in my opinion. Or the neckline on this possible head and shoulder top. Now, I'll also draw in and shrink the spacing here so you get back to the bottom of the market, which we picked on the same system, the same technique on April 7th, bullish engulfing, green, bullish, ER buy signal, and look what happened for months and months after that. Now, we don't have a red one today because we weren't overbought on the triple Qs within the allotted previous number of days, unfortunately. But we do have the pattern. It has a breakout. It has the new lows and new low closes since approximately the middle of September. We are, I have to point out, oversold. That is one thing that causes me to have a slight bit of conservatism about my very bearish statements. If I had 10 things to say about the market, 9 of them would be bearish. And the only thing that would be friendly would be the fact that we're oversold. It is not uncommon to see pattern breakouts be, at the time they break out, like today, now, oversold. But they still go down for another day or two, and frequently sharply. Next, 30-minute chart. QQQ. Kaboom. Next, NASDAQ, NQ. Kaboom. What can I say? The only thing that looks friendly here is the fact that you're oversold, and it isn't even that oversold. It's just barely oversold. Lots of, well, not lots, elbow room to go down even more. All the other things I see told me south, fast, immediate. I would have bought puts on the opening this morning. Man alive, they would have been good trades. All right, MNQ 30-minute collapse. We have another bearish engulfing ER sell signal on the YM. How can that happen? Because within the allotted number of back days, we were overbought back here when it made for the YM higher highs. And that's the only index that made new historic highs in November. Everybody else came up close to the highs in October, couldn't do it, built that last potential shoulder, and kaboom, broke out today. So this is even more bearish for the YM if you ask me. It hadn't made a lower low yet than the October lows. It's still got a ways down to go. But if I were playing odds, sure as hell would be short. YM, oh, the key here is if I'm wrong, we close above today's high. That is a way, way back up there. For the spider, that's approximately 24 points higher than we are. So that is not super likely to happen real quick. And I'll probably have many more adjustments to say about that in the meantime. It's assuming it goes sideways to higher, which I do not think is going to happen. 30-minute chart on the YM. Tierra del Fuego heads south. Russell, another set of new lows. And now this particular index only has reached and fulfilled my downside objective, which I have been talking about, down to 2308, and it was almost exactly met today and closed at that level. So my downside objective off the small double top, it was small, has now worked past tense, all over, done, great. Now what? Well, I think it's going to break the support level, and the Russell could drop a tremendous amount more. I just don't have a good feel for how much. Oh, I suppose I could something around 2170 next. The 30-minute chart on the Russell. And lastly, okay, that was the last one. And bonds. Interesting. We have a bullish engulfing in bonds today. It implies it's going to go up, which implies rates are going to go down. But remember, it's stuck between a rock and a hard spot at the moment. We don't have a breakout today. It tried breaking out to the downside, made new lows, and all of a sudden popped back with a vengeance. Excuse me. And not only after making new lows for a month and a half, closed higher and got higher than yesterday's high. That's a bullish engulfing. I would have had a green one, but it never got oversold, so I don't have that criteria. But I like this. It looks like it's going to go at least back up to 117.25-ish, and we'll see what happens then. Notes have almost the exact same thing. Support held, trend line held, reversed, bullish engulfing, already back up to resistance that fast in one single day. It tested the lows, so support, and is testing the highs in one single day of the last, what is that, about 3 weeks. That's a pretty large range. I think it's about to pop up into new highs. Whether it can get into new high ground for the last 3 months, I'm not sure. But that certainly is a major resistance area around 113. Next, crude. A little bit lower, a little bit of a dip. Resistance is stopping it several times now in the last month. The lows are getting lower and lower, and that's exactly where I think it's going to go. I don't see anything tremendously bearish happening real fast, but I am looking for a test of 55.80, and I do think there's a chance of it coming down to probably 51.5. Natural gas. Resistance is stopping the rallies. I don't see any downside breakout below Tuesday's low. that would be the first significant indicator that it's going to continue to work its way lower. Excuse me. Lately, it has made some new highs, had a little dip down to support, and has come up a little. Sorry about the cough, but it's getting a little stuck. So that's about the best I can say. I'm not going to go any further with that. Miserable failure, I'll tell you that, on heating oil after making new highs since June, when we had a fantastic ER sell signal. We saw no upside follow through. That was Tuesday's big strong rally. Wednesday, yesterday, came right back down below previous highs, closed below previous highs, and today wiped out the low of yesterday, the day before yesterday, and the day before that, and stayed around its low. This looks like it has a broader double top potential, which is really bearish longer term. Probably all, and I'm just eyeballing this, down to at least 1.7, maybe even lower. We'll have to see about that. I'll do some more work on it, but this is bearish. Gold sideways, getting stuck a little here. I'm still looking at this as a rally and a bear move that got overbought a few days ago last week and is now starting to attack support. And I need to get lower than 39.05, let's say. Yeah, 39.02. In order to have a lot more downside expectation. But that's what I'm thinking is going to happen. And I'm really bearish down to the support levels a little below 36. Silver, basically the same thing, but you've got something a little bit better double top possibilities. Gold, these two highs were not that close together. Silver, they were. So this is not bad. I've seen better. A double top. Downside objective would be right back to major support. 37. I need downside breakouts. Right now I need to have some new lows. I think it's about to happen. So I'm bearish. I'll keep you informed. Platinum closer to the downside breakout. Did have a bearish engulfing. Never did get a failure on that. It never got higher. It only touched the highs of the bearish engulfing a few days ago, stopped, and then came down. This is a new low and a new low close for weeks. Looks like it's about to break the bull trend line. Looks like it's about to test a couple of different support areas. But after going sideways for a month, I think there's going to be a lot more downside momentum here. I'm expecting something in the ballpark of 1350, 1300 next. High grade copper, bearish engulfing today. Probably the nail in the coffin. It's going to break this little bull trend line over the last month and a half. Then you'll have a downside breakout that'll get to the minimum downside objective, 4.37. That's what I've been talking about for a while. This is a little double top. That's exactly what I'm expecting. Kill that line, don't need it. Grains. Now, you know I'm basically bullish on grains. They've broken into new high ground for many months on all of the grains. So you deserve occasionally downside technical corrections in a bull trend. So you try to figure out when they start and how far down they're going to go and how long they might last. It started, but it's already gotten to my first minor support level on soybeans. Not oversold, so I don't get any help from an oscillator at the moment. I could go down a little bit more. 1092 is the worst. Anywhere between where it's gotten to right now and 1092, another 30 cents, 30 cents lower. I think it will bottom out and start to head to new high ground. I'm very bearish, bullish, very bullish on grains. Soybean oil had gotten up almost overbought, slipped off a little. I can expect to move down maybe to the previous lows or close to it, where we got a bullish engulfing at the bottom of the market. But there's no clear support here. We're just in a murky area right now of support. RSI is not giving us any help. So that looks interesting at 50.08, 50.10, give or take a few ticks. But I don't know. Some level shortly from now, few days, a week, a little bit lower, not too much, bottom out, turn up, make new highs. Next. Same thing for soybean meal. There are support levels that are very profound long term as well. Just a little lower, 309, 313. They're very close. I don't look for much of a break. At the most, 297. Next, corn also dipping down. And today we did some damage. Now, I've been talking about this head and shoulder bottom. I didn't like the fact that it had a double shoulder on the right and a single on the left. That's not symmetrical. Usually the good ones are symmetrical. The timing for the last shoulder is a month late, so that's not symmetrical from a timing standpoint either. We broke below the neckline today for the first time since it broke above it. And it's a new low for about 3 weeks or so, and a new low close. So I'm guessing, well, I'm expecting 432 support and maybe down to 423 and a fraction. Those are two good support levels. If it immediately tomorrow starts closing back up above 440, well, then my head and shoulder bottom is back in business, and I'll consider this a little bit of a fake out. But right now, there's some damage done. Corn's a little iffy at the moment. I'm still bullish long term, but not for the same technical reasons. Next, wheat. Holding a support, big dip, could bottom out anywhere here. Of the grains, wheat looks the most, or the least, I should say, intermediate to long-term bullish so far. All of the others, corn and the bean group, have new highs for a longer period of time, more bullish. And apple, new low close, about to break support. This gap is about to get closed. I've been talking about since it happened pretty much a month ago. Almost exactly a month ago. So here we go. We're going to hit 263 and 3/4, and I don't think it's going to stop lower. I've got another gap to close at 253, and major support doesn't even start until lower than that. I'm talking 241. That's where I really think it's going to be going, to about 240. Next, bearish engulfing in Tesla. Not oversold, not overbought, just a bearish signal. It is a new low close, not quite a new low, but a new low close for a couple of months. So if you were drawing a close only chart, that would look bearish because it's the lowest level, lowest close. And exactly, I think the market is going to head south, 269 and a half, closing an old gap. Can't rule out 239 and 3/4. What is it? 238 and a quarter. But there are various pretty good support levels on the way down. So let's watch to see where it tries to bounce and not bounce and so on. But I'm bearish. Tesla, Nvidia, big bearish engulfing again. New low close. Almost a new low. We're about to break the support going back to late September and then hit another support level starting at 173 that I expect easily and quickly, and down to 164, which looks pretty likely, and there, and maybe even lower than that. I don't see any particular pattern per se. Next, big break on AMD. You know, I've been talking about this gap way down here at 170.57 or so. To be very honest, the exact number, not that that's going to happen, 170.68. That's where the gap is closed to the tick. The high the day before it gapped up, 170.68. But I'm not long-term bearish. This is simply a big correction and a long-term bull move. You guys have a great day and profitable trading to you. This has been a day to remember. Profitable trading to you.